Jono, to you first off, if we start at the remote camera, breaking some resistance levels to crude price. Just tell me now what happens when you factor in not just that weak print on the US economy, but also something that hasn't featured in our commentary this morning, the geopolitics.
Yeah, Carsten, look, when you breach critical support, there are a lot of weak longs and they just exit the market in a hurry. Last night we did see a capitulation, I guess, of those weak longs in the market, and I guess it was a culmination of news that occurred. The strength in the US dollar, Greek debt concerns, strength of the recovery, and also China actually increasing their reserve ratio. All that sort of combined to people to start to question, hey, is crude really going higher, or should it come under pressure? And the result was, yes, it's coming under pressure, and it's believe it or not, it's traded down to very, very critical support at 95.
All right, Peter Turbulence, to you, welcome into the show. What happens when you breach that critical support? Is it a given that we're in a bearish zone, or you see enough volatility to drive price action in the other way just as swiftly?
Yeah, I mean, we've seen volatility between $95 and $100 a barrel for the last week or two now. We did actually breach $95 last night very quickly at about 3 in the morning, down to 94 and straight back above it. So as long as we can hold around this level for the next couple of sessions, it won't be too much of a problem. But US dollar strength could be a concern if that's ongoing.
Now, how are you reading that greenback play? Because it was the only place to be overnight, but again, you get a resolution to the Greek situation, unlikely as it seems, so that thematic could be broken.
Look, US dollar strength, this is only a rebound for me. I don't see this lasting. The US has got big problems. Even though Greece does have problems, the US is a lot worse. So if we see Greece actually get solved and the ECB pull their finger out, I think you'll just see further US dollar selling.
Jonathan Barrett, you had one with Peter on that one, or what?
A little bit. Camping in a different paddock, I think, at the moment. I think I gain a little bit of strength from the US dollar because I feel there is a bit more of a change. It's been a tremendous trend for the US dollar to continue to weaken, and it's been the panacea of all problems that the US have had. Given the fact that we're not going to get a QE3, I think the US have to try some other measures to actually stimulate the economy, and I actually feel the measures they're going to employ is to lower the cost of primary imports. The easiest way to do that is to allow the dollar to appreciate in value, and that's where I think, and technically if you look at it, that US dollar is at a major low, and it's proven that it hasn't broken for probably the last 3 weeks. So if anything, we're looking for a correction that might even turn into a trend for that US dollar. Just check out the dollar index chart.
Okay, but you've been unequivocal there, saying there will be no QE3. We got inflation numbers overnight. Okay, a bit toppy, but annualized and underlying, which is what the Fed looks at, they're within the comfort band. They could justify more QE3, Jono.
Look, I don't think so. I think 1 and 2 were there. And when I listen to the rhetoric that Bernanke has provided, I think he's basically signalling to us, hey, look, we can't keep throwing band-aids at this problem. We've got to hunker down and try and do something. And if he can continue to lift the optimism of confidence in the States, then there will be no need for that QE3.
Okay, well, confidence and optimism, arguably, Peter Turbulence, was brought to bear by QE1 and QE2. It was, if anything, the punch bowl was brought out. Everyone loves a drink, don't they, at a party, and he gave it to them. Why would he whip it away now?
I don't think he's going to whip it away, and I think that the market's wrong if they think that he's going to spell it out to the market. He's not that stupid. So I think that QE2 will come out and will roll out now, and as we've seen, look at the markets right now, not a pretty sight. And then he'll have to jump back in, and they won't pull out altogether. I mean, they're going to roll over debt maturities, and they will have to put padding around the economy. They can't just jump out.
Because let's just remind ourselves, QE2 was justified, was it not, at the time, as saying, Bernanke, as he did say, I don't see an inflation build up here. And even beyond QE2, and it was rolled out, he said if inflation hits our shores, it won't be long lasting, it will be transitory.
Yeah, I'd have to agree, and I don't think anything's changed in the US economy. The US economy is going to be dim and is going to be in a lull for a long time to come. And as I say, the market's focus is Greece at the moment. Greece will be sorted out. We can't afford the global economy for it not to be sorted out. So US dollar shorts are still there. So last night's bounce is just because the market is so short US dollars at the moment. So it's just a short squeeze in my mind.
Okay, Greece will be sorted out. Jonathan Barrett, if it is sorted out, does that see the copper price point to further gains? Does the China story cement itself off there, demand on the back of those industrial production numbers looking fairly well cemented.
Hi, Carsten. I think when you look at copper as a primary import, you just have to look at what's happening in China there. The numbers we saw out during the week, although they were just okay, the big concern I had was in the inflation numbers there, and the ability now for China to have to increase their reserve ratio again. I think it's for the 9th time in a row. So when you see that the #1 consumer of copper is trying to slow, you can't actually see prices at this level for too long. And when I look at the primary import markets, I see that traders have already hit the oil market, and now I think they might actually look for the copper market. Sure, there's a concern there on inventory draws at the moment. I think that's only natural when we head into the summer period. But overall, I think we're going to see more trading to the downside, and we've got more of a bearish outlook for copper at the moment, given that we feel that this recovery is all stalling and China's still trying to slow its economy.
That's the thing, but they're still trying to slow what looks to be a runaway train. That doesn't imply demand just crashing and burning, does it? Why would you sell out at these levels?
It's not that you're selling out, you're establishing a short position. We're actually, or our analysis is pointing obviously to a slowdown. So if it's a slowdown, then we're actually creating short sort of feeling that the market's going to go lower, so we can buy them back at a cheaper rate. So it's not essentially selling out because we don't think there's a recovery. It's a feeling that we feel that it's actually stalling. And if it's stalling, then there's no need for these prices to be at this level. They should be lower where they can actually clear more profitably. And that's, I think, the key.
OK, Peter Turbulence, if you move into silver, though, you're saying China provides a trigger there for maybe prices moving higher. So do you agree with Jono that actually there is a slowdown kicking in, or do you think this could be a trigger point for another bounce up?
Yeah, I don't see this slowdown that everyone keeps talking about. Everyone's so short-term and micro-focused from day to day, from week to week, month to month. Ultimately, the last set of data that we just saw out of China was quite positive. So I actually don't see a slowdown happening at all, to be honest with you. So demand's going to remain strong. However, when you talk about copper prices, if equity markets keep going lower, we ain't going to see copper going higher.
Is that just an inevitable 1-2 punch, both go hand in hand together down?
That's the way I see it, yeah, definitely.
OK, gold, though, remaining resilient. Let's switch into that one. It didn't crumble, didn't crash and burn. US dollar was elevated. What's going on there?
Look, I see commodities at the moment and over the next 6 to 12 months as a currency play. I'm short US dollars, long commodities. However, at the moment with Greece situation and Europe problems at the moment, we saw that gold and silver were firmly bid in overnight trade. And it seems like a bit of a win-win because we have safety flows going into precious metals, but at the same time, we have inflation concerns at the same time out of Asia. So it's a bit of a win-win in my mind. And gold's been holding up very well in a 1550 range, you know. And if we break the top side there, we'll take off to fresh all-time highs.
Jonathan Barrett, your take out on gold?
Gold, I think, is holding very well. The inflation, to me, is the major key there. People are moving back into gold because of the inflationary concerns, not only in China. CPI data last night in the States saw it up as well. So I think people are looking for that hedge. They can get access to gold very easily these days. So in my mind, I think gold is a very stable play. Perhaps not all that aggressive, but certainly a stable play if you're looking to park some money.
What about the role as well of central banks buying into that space too? Are you getting the clarity that you'd like to see in terms of a weighting in that space relative to other investors?
Oh yeah, absolutely, Carsten. We're seeing that, and if you think the central bank activity in the last quarter was the largest quarter where central bank activity was since 1964. So central banks are weighing into that play. They will continue to weigh into it and pick up gold. And I think that's one of those underlying support mechanisms that we have, where it is the flavour of the period for central banks to move out of some of their cash holdings and into some hardcore assets, and gold happens to be one of them.
And that's irrespective of US dollar strength?
Irrespective of US dollar strength, and this is where the supply-demand scenario comes into it. The fact is, on gold, we do not have the supply to meet the demand. So, and you can see why people are diversifying into it. When you look at all the critical amount of new mines coming on in production, that will be a focus that the market will look on, that I feel that we won't have that supply of gold to meet the demand that people actually want.
All right, let's swivel into some of the softs. We know that cotton prices could be looking well supported, Peter. Turbulence, because if anything, China's rotating its crop preference away. It's putting more emphasis into some of the grains, for instance. Do you see that as perhaps one reason why cotton could continue to defy other projections of falls in other asset classes?
Look, it may be, but for me, I like to keep it a bit more simple when it comes to commodities. If equity markets can stabilise here and we can get positive sentiment back in the markets, we will see these softs move higher. I mean, it's just a demand thing, you know, more optimism, better demand. US dollar is also key to this as well. So I only see this as a temporary bounce. If the US dollar continues to decline, we'll see cotton move higher. There's no doubt about it.
You don't see perhaps much more of a Wheel of Fortune mentality on equity markets relative to the fundamental play that dominates the commodity space?
Look, I used to look a lot at supply demand. Supply demand's huge to commodity markets. However, we've seen a massive change in the markets over the last year or two. It is key, and it is 50% of the way that I analyse commodities. But the US dollar play is key to this at the moment. You look at oil, all right? Oil's held up not because of good demand in the US at the moment, but because of a weak US dollar. The reason why we saw the sell-off last night is people are concerned about future growth and future demand. So it's a 50-50 play on how you weigh up the currency over the supply demand.
Jonathan Barrett, final call to you. What are you looking at with interest as perhaps one of the outliers this week, irrespective of what we've just talked about?
That's all right, Carl.
Yeah.
Look, we're short gold, short oil at the moment, and we're moving into a short play in copper. We just feel that copper at these levels aren't sustainable. Even though we're seeing US dollar starting to strengthen, I think copper will in fact come under pressure. So for us over the next week or two, it's a short copper play.
Jonathan Barrett, Commodity Broking Services, and Peter Turvalence from Compass Global Markets. Gentlemen, both, thank you so much.
Thank you.